Okay, so, well, thank you once again, Eddie, Dave, for having me here today. It is a pleasure to talk about real estate in front of everyone. Attendance. It is a hot topic in Canada. It's a even hotter topic in the greater Toronto area. Torontonians, they love talking about real estate, especially in 2020. We have COVID-19 running. The market is in chaos. Oops, and so is my equipment. The market is in chaos, and everybody's looking for answers. Everybody's trying to do some prediction and trying to throw out headlines. Now, I want to tell you something funny. For my job, I study the market a lot, and I spoke to 4 economists from 4 different banks, very intelligent economists, and we have 2 risk consultants as well. So I spoke to 6 people. So I'll let you in on a little secret, okay? So 2 economists from 2 banks told me that by 2021, the real estate market will be down. Okay, now I speak to 2 other economists from 2 other banks. These are the big 5, right? And they told me, hey, in 2021, we think the market will be up. And then I spoke to 2 risk consultants, and they said, one, we think the market could be down, but it could also be up. So that is the secret, guys. Don't let anything out. I just basically wasted 4 hours of my time speaking to 6 people. What I'm trying to get at is that economic forecasting, stock forecasting, stock timing, or real estate forecasting during a pandemic, in fact, is even harder. It's hard to begin with. It's even harder during a pandemic. It's almost impossible to know when, right? When and where. And today, I'm not here to offer you, hey, buy now, sell today, or buy now. I'm not telling you any of that because it's impossible to know when the perfect time is. And I'm not trying to forecast anything. What I am trying to do here today is I want to offer some perspective on long-term economic real estate value, right? I want to offer a macro level perspective, right, on what real estate value, how it's built and what builds it. And one of the things we are talking about is that if you read about real estate in Toronto, you just hear about supply and demand, supply and demand, supply and demand. Okay, there's too much demand, right? Let's not talk about supply. That's a whole nother topic. But let's talk about the demand. Where is this demand coming from? Okay, where is this demand coming from? And I want to talk about 3 things that can affect this demand. And this is my personal opinion based on, studying the market in Toronto. And desirability, the cost of money, and population growth. These are the 3 things that can really real estate value in the long run in Toronto. Let's start with desirability. Now, I know I have, for fact, I see 1 accountant in the audience. They might appreciate this, but if you're an accountant, if you're an investor, you might know about this. Toronto real estate is extremely desirable globally, and there's 2 aspects to this. One aspect is a very positive aspect of Toronto real estate, okay? And another aspect is very, very negative, unfortunately. And I do not want to get into the negative side why Toronto real estate is desirable, right? There are some bad reasons. And the reason I don't want to do this is because we are in lockdown. I'll talk about, bad news and doom and gloom. I want to talk about the good things and the positive things about our great city that we all live in, right? And we do have some out of town folks, so sorry if I'm making too many Toronto references. But let's talk about desirability. What makes Toronto desirable? Well, there's about, if you ever heard of a global livability index, meaning how livable is your city based on various, social, economic, environmental factors, you can see that there's about 30 of these indexes, and vast majority of these have Toronto within the top 10%, right? Sometimes we're ranked really high, sometimes we're like number 16, but this is out of hundreds of cities globally. So Toronto is pretty impressive in these rankings always. And what makes us livable? Well, I want to start with something happy. We're a very happy city. Don't just take my word for it. The World Happiness Report is a nonprofit organization. They calculate the well-being. They measure the well-being of its residents based on socioeconomic and environmental factors, like I said. And Toronto ranked number 13th in 2020. So we're the 13th happiest city in the world, and that is out of more than 200 places, so, which is quite amazing, almost top 5%, right? We're a happy city, but guess what? We're also very, very safe. The economists, they have a thing called the Global Intelligence Unit, and we are ranked in 2019 as the 6th safest city in the world to live in, right? And that is almost 7 million residents in the Greater Toronto area, and we're ranked number 6, right? That is, honestly, we're one of the safest cities. That is quite amazing. So once again, so we're a happy city, we're a safe city, and guess what? We are an economic powerhouse, okay? More than 20% of Canada's GDP is from the Greater Toronto area. And guess what? Based on this pie chart here, we have an extremely diverse economy. And what does that mean? Well, it means that we are less susceptible to risk, less susceptible to downturns, just like your stock portfolios, right? And you can see leading the way is financial services with 20%. So for example, if manufacturing, like for example, Ford or GM goes out of business, right? A place like wind would be hit very hard. Or if oil prices drops like now, right? Right now, Calgary economy is hit extremely, extremely hard because resource-based economy. But if you look at Toronto, we are well insulated and well diversified, which is fantastic for keeping real estate value. And one thing this chart does not show us is that there is a rising sector. There is a sector that is rapidly, rapidly growing. And what is it? Well, it's our tech industry. Guess what? Toronto is a rising tech power in North America and globally. In 2019, CBRE gave us a tech talent score, meaning the amount of tech talent, the quality and abundance of tech talent available, and came in 3rd, right? After San Francisco and Seattle, which is amazing, right? We beat out cities like Washington, D.C., Austin, and New York, which is saying something. We do actually have a New Yorker in the audience today, so I want to give her a shout out. So this is quite amazing. We're ranked 3 out of 50 top cities in North America. Now, we are, once again, we are a happy, safe city, economic powerhouse, and a rising tech power. And the ironic thing is that we rank lower in some of the livability index because of our affordability of housing is very low because we have very expensive homes. And it's kind of interesting. The irony is that we are the victims of our own success in a way, right? Now, let's move on next to the cost of money. I want to talk about the cost of money and in relation to asset prices, and I want to give you some perspective. 200 years of indexed real estate interest rates. You can see that since the late 1700s till all the way to 2000, this chart goes to 2018 really. You can see that the average US interest rates has only been 5.18%. I know we're in Canada, our interest rates are pretty much tied to the US interest rates. They're extremely similar, right? So 200 years, we're at an average of 5.18. And in the history of indexed interest rates, it's never gone down under 2%. We're at 0 interest rates right now, or 0.25 interest rates in Canada, right? Which is insane. Which means for the last decade and change, we have had the cheap borrowing cost. Money has been the cheapest price for money for in a period of 200 years, right? It's never been, and it is pretty crazy to think about, right? And when interest rates are low, guess what? Asset prices are high. And when they're at an all-time low, guess what? Stock market breaks all-time highs all the time, right? Well, not now, but previous couple years. And interest rates will affect real estate value as well because you can borrow more. Now, one other thing I want to talk about is actually the total money supply. How much you got, right? It's M1 plus M2 and maybe other parts of the money. You can see that since the 80s all the way to most of the 2000s, there wasn't that much money in circulation, or as much. And of course, in 2008, due to the financial crisis, guess what happened? They printed $800 billion of stimulus package, and then another $400 billion, right, of stimulus package. They're printing money, not just the U.S. Europe is doing this, China is doing this, India is doing it, and so forth. And guess what happened now? Recently, Trump just released a $2 trillion stimulus package. Canada more than $100 billion, and keeps growing. China as well. And this is going to affect the overall money supply. It's making the economy very liquid. And a lot of economists and investment bankers are saying that clients are hoarding cash for the to wait for asset prices to drop. So a lot of people are hoarding cash right now. So it's really interesting. And what does money supply mean? Well, there's a lot of money. Interest rates typically tend to be lower in the short run. And, of course, interest rates is extremely difficult to predict because, it's based on economic power, inflation, government policy, and money supply is one of the factors. But it will affect money supply. The more money there is, it affects asset prices as well. Now, last but not least, we talked about desirability. We talked about the cost, how cheap it is to get money. Let's talk about a gigantic factor in real estate value: population growth. Guess what? If you know Toronto, you would know that, when I was a kid, Burlington, Aurora, Markham, these are all like considered middle of nowhere. Highway 7 used to be the best place to drive with no traffic, right? That's not the case now. And these places were extremely, extremely affordable. Well, lastly, we have to talk about one of the most important factors for long-term real estate growth, and that is population, right? That is population growth. Let's take a look at the Toronto population. Look, currently we're in 2020 and the GTA's population is about 7 million people. Now, the Ontario government has projected that by 2046, it's going to be about 10.242 million. That's more than 3.2 million for the next 26 years. That's more than 120,000 per year. Now, our friend Elizabeth spoke earlier on immigration laws and policy, and she does not foresee any change to the long-term or short-term policies of immigration. So we have an aging workforce. We are one of the most successful immigration countries in the world, right? In terms of integration, in terms of economic output, in terms of technical workers coming in, right, and adding value, and making Canada more, diverse. So we are definitely, I don't see any changes on that. And this projection will most likely hold more or less within a 5% range, right? Within the next 26 years. And that's what I personally think will happen. And if you think about real estate in general in Canada, when you immigrate here, you have maybe 4 major cities that, I would say 3 major cities that are economically speaking very, very powerful. Like you have Vancouver, you have Toronto, you have Montreal. These are the 3 big ones. And Montreal is a French-speaking place. So if you do not want to go to a French-speaking city, you just want English-speaking city, it's either Vancouver or Toronto. And Toronto is more of a economic power than Vancouver. Vancouver is the nicer place for enjoyment, and it has the ocean and nicer climate, but Toronto is the powerhouse, and it's a powerful destination for many new Canadians, especially if you think about what's going to happen to real estate. When we were kids, Burlington, Aurora, these are places, Markham, these were places that were very affordable, that were, far away in the considered middle of nowhere. Now look at Burlington, Aurora, Markham. $1 million homes are everywhere. I mean, Markham, everything's over $1 million, I feel like. It's very common. So with so many people coming into the GTA, we're going to continue to expand. The pockets that are empty and less dense now are going to fill up. So average to good places are going to be considered very desirable in 15 years or 10 to 15 years. And desirable places right now are going to be very, very desirable and very pricey in 15 years, I think, right? So population growth, very important. Now I spoke about various macro level perspectives on how it can affect real estate value. And mind you, these are not the only three things that can affect real estate value in the long run on a macro level. But what about at a property level? What about on a micro level? What can affect real estate value? Well, there are five major factors that can contribute to 85% of overall real estate value. What are they? Let's talk about that next time.
So again, thank you, Max. Okay, so I like to make sure that we are moving forward with this momentum, and the schedule for the rest of the, the, the month is like this. So Monday is a holiday, so we'll skip Monday. And next Wednesday is actually Erica Murray. Erica is going to talk about, he's a lawyer and specialized in intellectual property. So she's going to talk about intellectual property 101. Okay. And next Friday is me. I'm the speaker. I'm going to talk about leadership. I'm going to share a book review for you. And this is a book is one of the New York Times bestseller, and it's called 21 Irrefutable Laws of Leadership by John C. Maxwell. I read that book quite a few times, and I like to have a multiple part series on leadership, and is subsequently coming in May and June as well. So this is the schedule. And on that note, I also want to showcase a little bit of Erica. Erica Murray, she's the speaker for next Wednesday. Again, the time is 12, and we will post that again through WeChat, WhatsApp, Facebook, Eventbrite, Meetup, and various channels to distribute this. For those who like this kind of format, I would like to encourage you to forward the invitation to those who know that could benefit from these things. And I like to make sure that we can add value to people's day during this pandemic times, and contribute positively to provide the momentum and energy for the day and for people working from home.